Hey, good morning, or good morning, good afternoon, everybody. It's Mike from smartoptiontrading.com. It is Wednesday, the 27th of September. This is our weekly midweek update. We've had a very wild day here in the markets. I'll just use the SPY for this. We've had these big down moves. We gapped up ever so slightly today, and then we sold off from the open, came down hard. We put in a low all the way at 422.29. That's important. We'll come back to that. And then we got this rally out of nowhere on no news. We went back almost the highest of the day before we rolled back over here again. When you look what's going on here and you look at the map here, you see we're down, down, down. We have this gap we've never filled that started this big down move up here. And we're not far off of the 200-day. That 422 area, well, it should make some sense there, because what we did is we came down and we filled this gap, and you can see the high there is 422.92, and you can see our low here is 422.29. So we came down, we filled most of that gap, and really the market's just getting extended here. We're out of the Bollinger Bands, well off the 8-day. We've been talking about this. When you look at the long-term map and where we might be going, you still have on the weekly chart this big cup and handle formation. And to me, the big spot to watch is going to be between 418 and 420. And the reason is that's where we broke out from. That is the level we pounded our head against multiple times before we broke out and had this run up here. And that is the level ultimately you really want to hold here on the indexes. I want you to notice another thing here, that the 10% corrections at 413.50, we're not there yet. We're down a lot? Yep, we're down a good amount here. We're down a little bit, of probably around 8% or so at this point. You got your 200-day looming here at 418.61. There's your, that area 420. That's going to be the area to watch, and that's the area you're going to want to hold. Powell does speak tomorrow. We have the town hall there. Notice the oscillators have curled up. We lost our nice signal here. We're negative 141 and 162 respectively on the NASDAQ and the New York Stock Exchange. And then we have a couple other things that are going on here. One, the VIX here is closing. It's still out of the Bollinger Bands here today. It's not back inside of it yet. We got a fake candle here on Friday into Monday, but I'm saying on Monday into Tuesday. But here we are closing right on the edge of the Bollinger Band. Big part of this problem is what's going on with the dollar. The dollar is raging again. We are new range highs, and you can see that the dollar has woken back up, took out this whole low. Remember, this rally we had from last October was built on the dollar weakening, and it's really starting to strengthen back up here, and it took out this area, and it's rallying back up here, and the market doesn't like that. The other thing the market doesn't like is what's going on with bonds. Bonds continue to get absolutely obliterated, and you can just get an idea of just how far down we've come on bonds. This is 5-year chart. You can see this, and ultimately what's going on here is the 10-year yield is going through the roof. And that on a monthly chart, you can see, look at this move here. Got to go all the way back into here, right? You got to go back into 07 to get back to this type of rates. And the market, this is just a toxic cocktail for the market, guys. There's no other way to put it. It's very, very toxic here for the market. It's not a good thing. And that's why we're having these problems. So yesterday we lost at a lot of the leaders. And if you look what's going on today, it's been interesting. Meta had their AI event today, which was merely more of a virtual reality event with their headset. It dropped badly as Zuck spoke, but it came back and closing back up in the range, but the 50-day remains resistance. Apple here still remains very weak, broke lower today. That gap at 170.42, we briefly went into it and came right out of it. NVIDIA showed relative strength, closing on the highs here near the 8-day here. AMD relative strength as well, trying to get above the 8-day. Google had a big pop today, getting back up close to the 50-day off that lows. Energy was very strong today as well. But overall, it was not a very pretty day. Most of the names are weak. The financials continue to get wrecked. And it is a risk-off environment. For me, as we go into tomorrow, I'd like to think we're going to get a bounce here. We should get some type of bounce. We have a reversal-ish candle here developing today. We'll see if we can get any traction off of this. It was looking much better about 20 minutes ago before we came all the way back down. But to get it back above yesterday's high, and I just want to point this out, you can run all the way to the 8-day and not change the complexion of this market one little bit. So there's a time to be extremely careful. If you're not a full-time trader, it's a time to basically lay low. For me, today this week I've been pretty inactive. I traded a couple times on Monday. I traded a couple times yesterday. I made 5 trades today, lost on one of them, broke my rules, paid the price, but ended up having a decent day. And when I say a decent day, it means I've made money. I put some money in my pocket. I'm green. And that's what I'm trying to do in this market. I'm not trying to kill this market. There's a lot of people out there who say I'm killing it. Most people probably aren't killing this market. Most people, this market is about survival. It's not trading easy. It's not necessarily following the rules. So with that said, I hope you're all well. If you want to join us, link in the description below. If not, no problem. You continue to get these free videos, and I'll catch everybody in the room live tomorrow morning at 9 a.m.